Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. It's just gone 5 past noon on Saturday the 27th of February 2021 and we're going to spend the next few minutes talking about Gamestop. Now it's going to be a pretty short video and I'm going to keep it as simple as possible. I put a video out 2 weeks ago saying Gamestop to the moon, question mark obviously, and I'd explain how I was taking a trade. And I actually took on a few very small positions because, you know, I wanted to take part in this piece of history. Not normally something I would engage in, but I want to be part of it. And I called for a gap cover and 300% profit. All right, we actually went up 100% and then 70% in post market, and then then started to crash once we reopened. But either way, we didn't cover that gap, so my trade is still valid. Now I closed some of it down, took some profit. I'm not a diamond hander, I admit, but I'm not totally paper handed either. I've taken a third off the table, I've left the rest in, moved my stop up, I get taken out a small profit, I don't care, I took part and I took some nice profit from it. That's good enough for Tom. So carrying on from that video, we're going to look at how the account's developed since then and where I think the possibilities of where we're going are. Alright, we're going to look at a bullish count and we're going to look at a bearish count. But before we do that, we're going to do what we always do on this channel. We're going to start with our basic technical analysis first, and then our Elliott wave analysis second. So a quick rundown if you're new to the channel. First of all, we have our Elliott wave on the count on the chart, which is all the little numbers and letters. We've got 4 exponential moving averages, which are the long wavy lines you see here. We've got a 10 in yellow, 20 in blue, 60 in orange and a 250 in green. We have a volume profile on the right hand side, which is a visible range with a built-in point of control, which is a yellow dashed line. It adjusts when we move the chart because it's showing us the volume for what's visible on the chart, hence why it's called a visible range. We have a MACD set with a 10 for the short term moving average, 20 for the longer, and a 9 to smooth. Obviously it doesn't look like much on the week chart because of the insane volatility in this market, going up thousands of percent and then losing 90%. Just looks like a big flat line at the moment. It'll make more sense on the day time frame though. Then we've got an RSI set to a 10 close with a green 30 level representing oversold and a red 70 level representing overbought. So let's clear the chart of count and just keep things basic for a minute. So weekly time frame, body of the candle on Friday closed above the 10, 20, 60 and 250 exponential moving averages. This is fundamentally bullish. We've lost bullish momentum for the last 3 weeks in the MACD here, but no bearish crossover of the short-term moving average over the long-term moving average, and no red bars to report yet. So just basically a loss of some momentum, a loss of some steam, but we could already be picking it back up, an increase of momentum on the Thursday and the Friday. Basically this week's candle turning green for the last 48 hours or so. Now we've got RSI has got nowhere near oversold levels yet. We're back into neutral territory between the 40 and 60, so even a 90% sell-off hasn't been enough to push this market into oversold conditions on the weekly time frame. Let's come down to the daily time frame and see what we can see. Right then, so on the daily time frame, let's just expand the chart a little bit, shrink this down a little bit. We can see how we closed the week above the 10, 20, 60 and 250 exponential moving averages is fundamentally bullish. Huge spike up, that's that 100% move. I think we bottomed, we bottomed around 38 spot 16 I make it. I brought in 55, 50 and 44. Okay, 3 small positions, closed a third of my trade, one of those positions on the open on the 25th, because I was worried I wouldn't be able to close it if I left it any later than the open, and sure enough things did start to seize up after that. Right, so we've now started to come back down. So what is this move? Are we going up, back to carry on up, or was this a little pop up and then we're going to come back down to new lows? Well, we'll talk about that in the count in a little while. I suspect that we did not cover the gap in the gap trade I've been talking about, so I think we're going to go higher. It's just my opinion. Right, so on the daily time frame, like I said, above all exponential moving averages, we've got bullish crossover of the short term and the long term moving average here on the MACD. We saw how even with this huge sell-off, the real build-up in bearish momentum died before we bottomed, and we started to lose that bearish momentum over several days before turning green again, even though the price went lower. RSI, the whole time we moved down lower, just basically flatlined in the neutral zone. This is systematic of reaching essentially a support level where people just aren't selling anymore. They're just, that's it. There's no more bears left. All the bears are out. Everyone's holding, or as the Wall Street Bets guys refer to it, I think it's called diamond hands. You know, this is a big flat line of diamond hands right here, and this is Mr. Double Down, and this is where this is basically where I called we were going to get this bounce. Now, okay, I was about to go into how can the charts predict this, but there's no point because people either believe it or they don't. I suspected that the bears, everybody who was going to sell in the short term had sold, and we were going to bounce, and we did, and that's all you really need to know. I explained why, because I thought we were going to come up and cover this gap. So let's come down to the count now and talk about a few things. Let's come down to the 1 hour, try and make things a bit clearer. Remember guys, the whole time we're in log scale when we're looking at the chart here. I have to stress that because this is what arithmetic scale looks like. Okay, it's just flatline data and a couple of random heartbeats. So, you know, not very easy to analyze. Log makes it much easier to analyze. So like I said in the previous video, I can see a 3-wave move down and we're going to pop to cover this gap. I put the gap to close at 212 spot 32 and we haven't made it there yet. So I think we're going to come back up and we're going to cover that gap. We might have a hell of a way back down first before we do. But I believe still that we have every possibility of coming up and closing this gap. So let's discuss those possibilities. Now, I've got this huge peak as either an intermediate wave 3 with a 3-wave move down into intermediate wave 4. The alternative is that the peak was a 1, which kind of makes sense really, and the huge 90% sell-off is a 2. I'm going to work on this count during the week because I'm starting to favour it. So if this was intermediate time frame 1, 2, we could call it primary time frame 1, 2. Who knows? After such a move up, we don't know whether this is just a bleep, a small blip and then down to single figures, or whether this is the start of something completely mad. You know, and if it is, you want to be in it. Well, that's not advice. You do what you like. But either way, if this is a 1, 2 or a 3, 4, then that means there's another wave up to go. This is the bullish count, guys. This is where we go higher. 1, 2, 3, 4, 5 waves up into a new 1. A, B, C down into a 2, I'm predicting. Alright. Now, we may have already done it. There may be an A, B, C in here like this. A, B, C. And we've already put in a 2 and we're already bullish and we're already going up. Bum, 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 bum. Higher, higher, higher. Okay. Or this is simply this first 5-wave move down in an A. And then we've got a 3-wave move up to come in a B, and then a 5-wave down move to come in a C to complete a zigzag into a 1, 2, bringing the price back around 70 bucks or lower. Okay, another opportunity to buy. If we look at what we've retraced though, now we've got to be careful doing this because it's easy to say, oh well, 50% retracement, that's good enough for a 2, let's go. We've dropped 90% here. If this is a 1, 2, then that's deep on any level, and it's crazy deep for a wave 4. But we're dealing with crazy here, so we just have to be tolerant of such massive moves. So if we come up from below here and have a quick look what we see, in log scale we made the 50. Bump, made the 50 and bounced. If we look at it in arithmetic scale, and we're just going to have to zoom in order to do that, and we're going to have to alter the chart to make it clear. You can see in arithmetic scale we've come deeper. We've retraced over, we've come into the yellow zone here, 61.8, 65. We've actually wicked through it. This makes me suspect that having wicked through it, we're going to come lower, maybe to the 78.6, and then get moving again. In log, like I said, we've hit the 50, so maybe we're going to come down to the yellow, yellow zone, 61.8 in log scale, which is around 69 bucks, 69, 70 bucks, right? So we go move down in 5 waves, move up in 3 waves, move down in 5 waves. Right, and then having done that, whether we've done it already and we're going to move higher, or whether we've got a lot further to go down. So bum, bum, bum. Having completed it into this 61% Fibonacci retracement zone, we then start going back up in an impulse wave, and off we go higher and higher to close this gap and to make a new high. That's the bullish case. Right, so now we've done that, let's look at the bearish case, which is just really simple. It still involves covering this gap, and that is that we're putting in a B wave retracement. Okay, so from the high down to the low, we came to the 61.8, right? Pretty solid retracement, 61.8. You could say this is a B, but it didn't cover this gap. I'd expect it to do that. So what if we're simply just going to come up in 3 waves, and we've gone 5, and then we're going to dim down to here like I suspect, 3, and then we're going to come back up in 5 to maybe the 78.6 here. This will cover the gap, and this would be A down, B up, and then 5 waves down in C, bringing you all the way back down into single digits, and it was a whole, and the top is in, and this is a bearish move down. And that's it. So for me, until this gap gets covered, I'm still in this trade. I've taken enough profit from a third of it already and moved my stop up to the invalidation point back here at the wave 1 that they'll close in profit anyway. I couldn't care less. Now, I'm happy. So I'm just going to ride this thing. Once we come up and get past 212, if we do, I can reassess and see what the wave structure is telling me. If we come down in 3 and then start moving up in 5, I'll move up with it, and so will my stops. You know, but you know what? Even if I take half of what's left after closing this gap, I might just leave the last third. I might just let it ride, and then stop worrying about it. I made my money. Doesn't matter. You know, if I get stopped out, I get stopped out in profit. So the way I see it at the moment is after this 100+% move, you've already, if you manage to do what I've managed to do down here and buy 50 bucks and below, you're already sorted. You've got no reason now to sit here and sabotage the trade and sabotage yourself. Clear your position, move your stop up to guarantee it, and then ride it. You know, if this is going to be a winner, let it go and let it ride and ride and ride. Now, for the diamond handers, you're betting on this being bullish long term, and if it is, and you brought a shit ton of the stuff, good for you. Shove it up Wall Street's arse and enjoy the profits. But bear in mind, and if this is an A and this is a B retracement to cover this gap, and then we come down and see, you're not coming back from this. This was a blip, this was a bubble, and that's that. That's the 2 scenarios I see. This is not financial or trading advice, it is just how I see things. So that's all I've really got to say about GameStop for the moment, guys. Let's see what the next few weeks bring. Maybe next week will bring down that retracement. If you do, and you are one of and you are part of the Wall Street Bets crew, and you want to load up, if that's what you want to do, and you see a 3-wave move down, go for it. Alright? Anyway, we'll leave it there, guys. I hope you enjoyed the video. If you're new to the channel and you have liked what you've seen, please subscribe, smash the like, let us know what you think in the comment section below if you want to, and feel free to share these videos with anybody. Alright, take care, guys. All the best. Should be back shortly. Cover another couple of assets I want to cover this weekend. So take care. See you soon. Bye bye.